Us. This is NDTV Profit. My name is Alex Matthew. With me is Hiral Dadia. We're coming to you live as the tensions in West Asia hit fever pitch. Most importantly, we'll be discussing this evening the latest developments from Iran after the US launched airstrikes in the early hours today that hit 3 nuclear facilities. It was an escalation in a conflict that till that point had been between Israel and Iran. As things stand, Iran has said that it will shut the critical Strait of Hormuz, and that has implications for crude and natural gas supplies.
In fact, it could also have a bearing on global supply chains. The closure of the sea route through the Hormuz Strait will require merchant vessels to take a longer route, and that will have a bearing on container costs. Major economies, including India and China, will have to face the repercussions. The key question from here on is to ask right now, what will Iran's response be? How will global markets react at the start of the trading week? And can India shore up its crude oil reserves and find alternative sources if required, Alex?
Yeah, absolutely. Those are critical questions to ask. But before we get to that, let's bring you up to speed with everything that has occurred in the last few days. First, on the 13th of June, Israel launched what it called Operation Rising Lion. This was the largest strike on Iran since the 1980s. Iran, for its part, called it an act of war. There was a call by US President Donald Trump to evacuate Tehran at that point, and the US pulled out its embassy staff and their families.
Moving on, between the 16th and the 18th of June, actually, Iran launched missiles, some of which pierced the Iron Dome. Civilians were killed and infrastructure was damaged. There were reports of the US Embassy and Tel Aviv Stock Exchange being affected on Friday. In fact, reports also said that Trump was reviewing military options.
And then the latest development. In the early hours today, the US entered the conflict, launching stealth airstrikes on 3 nuclear facilities, on Fordow, on Natanz, and Esfahan. This was thought to be necessary because at least at Fordow, Iran was reportedly enriching uranium to very high levels, potentially even to the point of it being weapons grade. And that brings us to this point. Let's start with some of the key questions that should be answered ahead of the trading week. Joining us at this point is Narendra Taneja, global energy expert, Santosh Rao, head of research and partner, Manhattan Venture Partner, and SC Ralhan, who is the president of FIO. Thank you so much for joining us this evening. We also have Vishwanath Nair in the Mumbai studio, as well as Shrimi joining us from New Delhi. Let me start, Santosh, with you. We're talking at a time when there is a lull in market activity, obviously because markets have been shut, but one would assume that markets will have to take account of a whole host of the developments over the weekend. What, according to you, are the initial reactions, starting with crude?
Yeah, thank you for having me. I think the immediate reaction, call it the knee-jerk reaction, it's going to be down. There's going to be downward pressure on prices. Upward pressure on prices, but the whole sentiment is going to be down. So it's going to be negative overall. Now, the only issue now is how deep is the conflict? How is Iran going to react? Let's get the details on what the total damage was and what exactly Iran wants to do. Is there going to be a contagion effect? Are their partners going to get into this? Is it going to escalate into something bigger? I think that's the big issue at this point. We knew about this war and the market was taking it very well. We thought it'll be pretty much it'll be contained in a certain zone, but looks like this bombing has totally widened the whole conflict. It has ramifications across the board globally on supply chains, on relationships, and everything else. So I think a lot more, we don't know everything yet. Let's see exactly what Iran wants to do, and let's see how China and Russia want to play a part in this. So a lot of ifs, ands, and buts, but the path of the trajectory is definitely down in terms of the sentiment and the markets, and the oil prices are definitely going to take a hit, at least initially, till we find out what the total impact is and how deep and how long it's going to be.
Thank you, Santosh, for that. I mean, yes, the sentiment is negative. Impact on crude is something that we will be eyeing. Let me head across to Narendra Taneja, global energy expert. Mr. Taneja, welcome to the show. How are you seeing the impact with regards to crude prices? Because since the time the war started, we didn't see a major escalation that did come in. We were hovering in that $70 to $75, $77 kind of a band. It has cooled off again right now. Once markets open, what's the kind of read do you have with regards to crude prices? Where do you see it moving?
Well, when you look at the global crude oil prices, they're mainly two factors which play important roles. Number one is core demand and supply, and that seems to be comfortable. So far, there is no supply disruption, and demand is not rising. So that part is comfortable. But oil is a geopolitical commodity. So any kind of geopolitical anxiety or fear or something in that kind of domain makes the oil markets extremely edgy and uncomfortable. Today the situation is that Iranian parliament has said that they're given a go-ahead to go and block Strait of Hormuz, and they've left the final decision with the supreme leader of Iran. Now there are 2 points here, two important. Number one is if Supreme Leader of Iran, he says, go ahead and mine or block Strait of Hormuz, then in that case, we are going to see a major escalation, not only in terms of, the blockage, but also in terms of war, because the US won't allow that. US is going to, any, Iranian ship, if they try to block or mine that area, you will find America intervening again. And American Secretary of State just the last hour has already issued this warning that if they try to block the Strait of Hormuz, then they should be ready for the consequences. So which means it's not going to be that easy. The moment Iranian ships come forward to block or mine, you will see American ships or Israeli planes in action. And don't be surprised if you find other countries also joining. Let's not forget one thing. Strait of Hormuz means basically 20% of oil, passes through that strait. 20% of the global, typically world produces roughly 100 million barrels a day. And out of that, 20 million barrels goes through or exported through a Strait of Hormuz, oil of Saudi Arabia, Iraq, Abu Dhabi to some extent, and then Kuwait, all that. And India, among other countries, a major buyer. It's not so much about the supply disruption only, it's about the price. If the Strait of Hormuz, if Iran succeed in mining or blocking it, then we are talking of maybe Brent going up to $150 per barrel, and who knows, even more than that. Can the American economy afford that? Can President Trump and his supporters and followers would accept that? Answer to all these points are basically no. President Trump has been trying to bring oil down to $60 per barrel. But he succeeded to some extent because we were in the range of $65 and $68 for a few days. But if Strait of Hormuz is blocked, then of course we are talking of very, very tough time, not only for oil, but for the global economy as a whole.
Yes, that is an important follow-up as well. And who better to ask than Mr. Ralhan, who's the president of the Federation of Indian Export Organizations. So the implication, as we understand it, would also be on container prices and global shipping, and supply chains would be impacted. What is the initial read that you're getting? Because one thesis is that while crude oil and natural gas supplies would be impacted, a large part of the other supplies go through different routes. Can you confirm that?
Yeah, certainly. It is going to be a very severe effect on India, because if the freight charges are going to be high in the times to come, then the import and export also is going to be affected. The exports to Russia will be affected. And the air charges is also going to be very high. It's very tough time for the exporters during this war. I think the people, I don't know when it's going to be stopped. From the news, it is not going to be any peace amongst this war. I think it is a very, very, very tough time.
Absolutely, Mr. Ralhan. A tough time exporters might face. We will come back to you in terms of which are the segments that will get impacted. But let me now head across to my colleague Vishwanath Nair, who's standing by to exactly explain to us what has happened in the Strait of Hormuz and how important it will be from here on. Vishy, over to you.
Right, Hiral. So what's happened now? That's the point from where we start this entire story. There's been a lot of news flow that has been coming in over the last 12 to 18 hours. I just want to start with the first thing, which is just this evening news came out that the Iranian parliament has decided to approve the closure of the Strait of Hormuz. These are news reports. Right now, there is a Supreme National Security Council which is reviewing this decision, and they will take the final call on whether the Strait of Hormuz needs to be shut or not. The decision currently is not final, but the threats are very real, and therefore it is important. But we also need to understand what the Strait of Hormuz is and why it is that important. It's about a 33-kilometer wide, narrow water body, very, very narrow. 33 kilometers wide is a small space for ships to move, and it runs between Oman and Iran. And the space, as you can see, it's quite a massive choke point for global trade. It connects Iraq, Kuwait, Saudi Arabia, Bahrain, Qatar, and UAE with the Arabian Sea and other parts of the world, and therefore it's a crucial point from which trade takes place. It allows for about 27% of the global oil movement. It also allows about 20% of the global LNG trade movement, and therefore these routes therefore become that much more important for the global energy needs. Qatar, which is the world's largest LNG exporter, liquefied natural gas exporter, sent about 19% of its exports through the strait in 2024. So for Qatar, it's also that much important. How is this going to affect crude prices? Well, that's the big question now for the rest of the world. Currently, Brent crude prices are factoring in a war risk premium of about $10 per barrel, as per whatever experts are telling us at this point. But a closure of the strait, that will have devastating consequences. Prices going up to about $100 per barrel. From the current about $75. That's what global experts, especially Faridun Fasharaki, is saying. How does this affect India? That's the next logical question. And according to what information we have, Strait of Hormuz accounts for about 38% of India's oil imports and roughly 52% of the LNG imports in 2024. Out of India's 27.5 million metric ton LNG imports, about 14.3, which came from UAE and Qatar, were via the Strait of Hormuz. Similarly, on the oil front, India imports roughly 5 million barrels of oil per day, and of that, about 1.9 to 2 million barrels come from the Strait of Hormuz. So there is a straight up impact. Of course, the government is saying that they have diversified their supply sources, but there is going to be a significant impact.
Absolutely. In fact, let's go across. Vishy, thanks so much for that. We've got the latest developments from New Delhi, in fact, and Shrimi is joining in to tell us what the government is saying. Authorities are apparently keeping close track on the trends with regard to oil. Shrimi, what are you picking up? Shrimi, I think, so it might be on mute. Of course, what you've spoken to a few sources. Can we get the latest developments as to what you're picking
Alex,
up? Yeah.
Can you hear me?
Yes.
Am I audible?
Yes, yes.
Yeah. So indeed, the government is on high alert, and in fact, authorities are closely tracking the oil trends, given the point that it may impact the inflation as well as the growth outlook for India. So what sources are saying at this point of time, that being an extremely sensitive sector, even a limited disruption shoot up the global crude prices, and being the unprecedented closure which never happened in past is going to have a clear impact on the India growth outlook as well. So what cautioning here is coming from the top sources in the government, that if the disruption extends over a week's time, it could nothing less than blow to the global economy, and India is not insulated from that blow. So there will be a clear impact on the growth as well. So, however, government is clearly saying that there is nothing as such alarming at this point of time. However, the contingency planning is underway. So two options which the government sources are saying, and they may contemplate if the crude prices breaches 105 threshold mark, will be that they may consider reduction of the excise duty, but that will have its fiscal consequences to it. And the other one is, of course, how to sort of increase the import from Russia and other partners here. So that is also under consideration, because it all depends on the pricing and the trends and the discounting, which is very important at this point of time. So overall, this unfolding situation, Alex, this underscore India's delicate balancing act at this point of time, how to preserve macroeconomic stability, as well as how to sort of make tweaking in the policy, which is important if the matter escalates from here.
Right. Thank you, Shrimi, for getting us the details. The most important thing over here is, one, whether government may consider reviewing the excise duty. And this is if it breaches $105 per barrel. We're still far away from that. And roughly 20% of world's crude oil passes through the Strait of Hormuz. So that's the key. Shrimi, stay with us as well, and we will keep coming to you in case of any further developments. But we also saw a tweet from Hardeep Singh Puri. What he said is, I quote, "We have been closely monitoring the evolving geopolitical situation in the Middle East since the past 2 weeks. Under the leadership of Prime Minister Narendra Modi ji, we have diversified our supplies in the past few years, and a large volume of our supplies do not come through the Strait of Hormuz now. In fact, our oil marketing companies have supplies of several weeks and continue to receive energy supplies from several routes. We will take all necessary steps to ensure stability of supplies of fuel to our citizens." That is what he's come out and said. Mr. Taneja, how would you react to this as well? You're talking about several weeks of inventory which the oil marketing companies are sitting with. In times of crisis, usually how much do you think the inventory should be at in terms of timeline? And do you think 3 to 4 weeks is something which is enough in case of any escalations?
You see, we consume roughly 5.5 million barrels of oil every day. We are the third largest consumer of oil on the planet, third largest after the US, China. Now, in such a situation, and we are importing 89% of our total requirement is imported. Of course, that includes crude oil we import, refine, and export to 107 countries around the world. Now, it's not so much about supply or the supply disruption. India is basically always more concerned about the price, because our economy is extremely sensitive to the crude oil prices. So our main worry is that in terms of, sourcing crude oil and all that, we are buying 40%, roughly 40%, if you go by the data of the last one, from Russia. We're buying from different geographies. We are buying today crude oil from 42 different geographies and regions around the world. We have diversified the last few years, and very successfully. But still our dependence on Saudi Arabia or Kuwait or the United Arab Emirates is quite substantial. Is roughly in the region of 38 to 40%. But as I said, if, for instance, the Saudi oil can't, enter the market, is out of the market, Kuwaiti oil is out of the market, Iraqi oil is out of the market, Abu Dhabi is out of the market, then we are talking of oil prices which may go beyond the comfort, for instance, of our economy. And beyond the point, even the government, they can, of course, cut excise and so on and so forth. But the question is, would that solve the problem? If the oil prices go in, let's say, if the Strait of Hormuz is mined or blocked, then we are talking of $120 per barrel to $150 per barrel. Iran is claiming, of course, $400 per barrel. That's a bit fictional, but 150 is quite realistic. The point here is that would Iran be allowed to do that? If you look at the history, the Strait of Hormuz never, ever been blocked. Never, ever. Now, the question is, would America allow that? Would UAE allow that? Would Saudi Arabia allow that? Would, for instance, even friends of Iran like China or Russia would actually allow that in terms of having kind of relations that they have with them? So I am still keeping my fingers crossed, and I still think that it may not be so easy. But if they try to mine or block Strait of Hormuz and Iran succeed in that, then we are talking of full-blown war in the Middle East, something that we have not seen for very, very long time. And it will, many other countries would get involved in that. And practically every single country on the planet will be impacted, especially those which are heavily dependent on imports of crude oil, such as Japan, South Korea, China, India, and don't forget even the United States. United States still import more oil than we do in India. So the entire globe, we're talking that situation. But my own sense is the world and especially the US would not let Iran block it, even if the Supreme Leader allows that.
Yeah. Speaking of responses from multiple countries, India's Prime Minister Narendra Modi has spoken to the Iranian president, has called for de-escalation. China has called for de-escalation. Multiple countries around the world have done so as well. But Santosh, the immediate reaction, knee-jerk reaction as you called it, is likely to have a bearing on risk assets as well. And here I'm talking about equity markets. We don't yet know what the full impact of it will be. And I think that uncertainty is going to play out and have a bearing in trade tomorrow as well. From your perspective, looking specifically at Indian equities though, barring oil, you have a situation where the economy is relatively sanguine, is relatively safeguarded from all of these geopolitical worries. Would you, as a keen watcher of the Indian equity markets, say that a buy on dip strategy is the best approach even in these uncertain times?
Yes, there are a few points I wanted to make. At this point, I don't think any country can afford a major disruption. Even in the US, inflation was coming down, and a big part of that was energy prices being down as well. So we don't want that to extend more and more. And Iran gets about 85% of its revenue from oil exports. So I think they have a weak hand as well. Yes, the strategic importance of the Strait of Hormuz is unquestioned, and they will do whatever they can to cause some shutdown, some partial dislocation. But my bet, I'm in the camp that there will be partial dislocation, partial shutdown, partial kind of disruption, and at some point, maybe up to $100 it can go up. That's one estimate that I saw. The partial disruption can take oil prices up to, a total disruption can take it up to 150. That's the worst case. But I'm in the camp that maybe up to 100 is definitely on the cards. But in terms of energy prices seeps across the economy, and high energy prices affects every aspect of the company. Even though you may be in a different industry, somewhere along the line you touch the energy pipeline in a way speaking. So I think India will see down, but I would say that it will be short term. It's a buying opportunity. I think I will buy it there. I will buy on dips.
Yes. So Santosh, buy on dips. Okay. So let's understand from an FI perspective. Now, Friday's session, FIs were key drivers of the markets. How do you think they will use this opportunity to reshuffle funds across assets and markets in the coming days, taking into consideration how Monday is expected? Because from an Indian market perspective, you've seen Nifty, which has actually crossed that 25,000 mark once again with ease on Friday. Do you think a 24,000 is something which is a possibility? Do you think there will be that kind of a knee-jerk reaction? And if so, will that nervousness be used by investors as an opportunity to buy? How should that strategy pan out according to you?
Yes, I've always said that on a long-term basis, India is the market. It's the fastest growing economy, and the money will pour into India. The FIIs and all that will not be threatened. In the near term, they will be up and down here and there. But I think the long-term flow is definitely more in favor of India. So I don't expect that. You can expect minor disruption across everything, but in the long term, which is what we are focused on as investors, I think it should not really change anything, and the Indian market should hold up pretty well to the extent. And this was the worst kept secret. We knew this was coming. And if any country is caught off guard, then they're sleeping at the wheels. We knew something was going on. Hopefully countries had alternate plans to tackle this thing. So at this point, I don't think, and even there's an Iranian camp that believes that this was good. Iran cannot have nuclear weapons. I think that's a well-known fact all over the world. So those things, they have the public opinion on their side, but then there is geopolitical tension in terms of invading a foreign country, and all those things will play into this whole equation. So there will be some disruption, a lot of negative talk, but in the long term, I don't think anybody can really afford a major disruption across the board, because all economies are on the edge. I mean, they're slowly coming back to life, and you don't want inflation to rear its ugly head and talk of recession coming into the picture. I think at this point, I'm on that camp where things will settle down in the short term.
Yeah, you said it. Inflation is going to be that critical worry globally, especially in a scenario, Santosh, when global growth is not necessarily where it should be. So in key markets in the US in particular, if there is a question mark on stagflation already without crude oil prices going to $100 a barrel, that really is a question to answer. But speaking of crude, because that really is the biggest talking point as tensions escalate in West Asia, we got you what Union Minister Hardeep Singh Puri had to say on social media, but he was speaking in Ireland a little while back, and here's what he had to say.
Out of the 5.5 million barrels of crude oil that India consumes daily, about 1.5 and 2 million only come through the Straits of Hormuz. We import roughly 4 million barrels through other routes, and our companies, the oil marketing companies, have enough stocks. Most of them have stocks up to 3 weeks. One of them has in fact 25 days stocks. And we are also confident that we can increase the supply of crude through other routes should the situation so warrant. We are in touch with all possible actors in this, the supply routes, etc. And I believe that there is no cause for any alarm on this score.
That's a really positive statement coming in from Hardeep Singh Puri with regards to escalations that everyone is anticipating in terms of crude prices. 3 to 4 weeks of inventory is what different companies are sitting on, and alternative routes is something which has been spoken about. So a possibility of a spike that we're talking about to $105 per barrel probably may not be the scenario as of now. That's what is pretty much assuring from here on. But the other aspect that we're considering right now is also in terms of shipping costs. And we've been talking about the same as well. In fact, Mr. Ralhan, let me come to you on this. What was interesting is I was just checking the Baltic Dry Index. On the 16th of June, it spiked to almost $1,975. From there, if I have to check the rates as on the 20th, they've come down to $1,681. So there is some bit of downtick that's coming in with regards to the Baltic Dry Index, which is indicating that the prices in terms of freight are coming down. Now, taking the recent developments, do you see that spike coming in again, number one? And two, which are the sectors, according to you, that will be impacted the most on the back of exports?
If the crude prices, if the war persists for another 1 week or 10 days, the crude prices will go up, which is going to affect the raw material prices like cotton, acrylic. All the textile people will be in trouble. Then the raw material prices of steel or copper, brass, they will go up. The Indian exporters are already under a lot of pressure because of the steel prices or the other. I think they will be under a lot of pressure because the duty by the US government up to 50% on steel, auto parts and aluminium, that is already putting a lot of pressure. I think the exports will be under a lot of pressure. You were talking of the freight because they will have to go through a longer route. So naturally the freight will go up.
Okay, important points that you're raising, Mr. Ralhan. And in fact, I think we've spoken about all of the salient factors to watch out for ahead of trade. Gentlemen, Shrimi, thank you so much for joining us today. And I'm sure that we will speak in the near term as well, because this is clearly a developing story that we will continue to track. Of course, if you're tuning in this late at night, you know that we've brought you all of the latest developments. Of course, a lot could occur over the next few hours as well. You can tune in live at 7:30 in the morning and we'll get you everything that's happened overnight.
And what's going to be important from here on is the overnight developments and how your US futures open up, what happens in terms of Asian markets and how India opens up. That is going to be the crucial aspect to watch out for, because India has been resilient so far, at least when the Israel-Iran war started. If Indian markets show further resilience, I think that is going to be the perfect sign of strength that we could hold from here on. But a lot of aspects to consider from here on. Completely out of time. But that is a wrap on this edition at NDTV Profit from Alex, the team that put the show together, and myself. Lots to watch out for. Please watch NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so